Good morning. Today is the 9th of April 2011. As you can see here, this is the closing price for April 7th, which was a Thursday evening, and the last price was, or last level was 1555. If you go back to my charts posted on 6th of May 2010, you will see that I described this whole move as a fourth wave, and I anticipated that after this small triangle here is resolved, we will go down, and that's what has happened. The question is, have we finished a five-way move from here? And that's what we're going to see. The quickest way to do that will be to do some Fibonacci ratio analysis. This move, which is the top of the second wave, down to here, right? If you look at the Fibonacci grid here, you see that this top was 61.8%, this was 50%, and this was 38.2%. So that sort of tells us that this is the right place to place the grid. Now, if you go back and look at my previous chart on 6th of May 2010, you will see that I have described this as a fourth wave, and this was a fifth wave. So that completes the third wave from the top. What I mean is, from here to here is wave 1, up to this point is wave 2, and then we had 1, 2, 3, 4 as a triangle ABC, and then a fifth. So the move from this point up to here was the third wave, and from here to here is the fourth wave, right? So is this the fifth wave to finish the whole mega move all the way from the very top, which we don't see in this chart? That's the most important question. Now, if you draw a projection from here, this is potentially wave 1 and wave 2. I'm afraid that this chart is too narrow. Let me blow this up a little bit. So here you are. The question is this move from here to here the final fifth wave? And how do I make up our minds? I think that from here to here mark the end of the first wave, and then from there to here, this point showed the end of the third wave, right? Then this was the fourth wave, and then we had the final fifth of the fifth. And this move was also an extended fifth. So this is how we confirm that. We take the full move from 0 to 3, and then from the top of the fourth wave, we see that it's almost a 100% move. Now, this is, for the time being, still a hypothesis. I'm still saying that the first wave finished here, the second wave went up to here, and then we had a third wave finishing here, where you have 1, 2, 3, 4, and 5, and then a fourth wave, and then a fifth of the fifth, right? And because this was an extended fifth wave, we are still seeing a very quick recovery back to the second wave of the fifth. Once we get up to around here, we might come down all the way and then embark on a new move up. So if you have not been long anywhere here, these levels are not very low risk levels, I would say, because after we reach somewhere here, which is around 1620, and that's only about 70 points from the current level, we should expect sort of a deep pullback and then a big rally. So traders should wait for this pullback here and then purchase their favorite stocks with a stop when the index, if the index should fall below this low. All right, let's review this chart again after a few months and see where the market has taken us. I wish you all the very best.